Hey, this is Matt from InvestiQuant. Today is Tuesday, February 9th, 2021. This morning we saw the markets gap down within the prior day range. We were a little bit choppy early on and have started lifting up into the afternoon session. We did make it up towards gap fill in all of the instruments. We have filled the gap. We looked at that this morning, and we are still holding the top portion of the range everywhere except for the NASDAQ. So what I want to do this afternoon is look at the price action that we're seeing in the context of the study that we looked at this morning, which was the overbought reading on the 2-day RSI. So let me go ahead and set this up, and we'll see what it has led to as we approach the close. So I'm going to select all four instruments. The setup we're going to be using is an intraday time-based entry that gets long at 3 p.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, this morning we looked at gapping down within the prior day range, and I'm just going to mimic that same study that we looked at while adding just a little bit more context around the intraday action. So to do so, we had gap down selected, and we had equals next to open and prior day range. That ended up being true, as we expected this morning. Next, I'm going to go into the indicator section to set up the rest of that study, which was the day after the 2-day RSI was above 95. So that's an overbought reading. And we had it taking place above a 10 and above a 200-day simple moving average. So an overbought reading in a bull market. Next, I'm going to go into the post-open filter section, and this is where I can add the context around what has happened today. So now that we've set up the action around what happened in the prior session, we can look at adding some action that has taken place since the open. So what I'm first going to add is that the gap has filled. So I'm going to come in to opening gap and hit equals next to gap filled. That means that we traded back to the prior day closing price. And then I'm also going to say we're still holding in the top half of the intraday range. So if I go to this intraday close versus intraday range, I can hit equals next to close and the top half of the intraday range. And that means the price as of the entry time, which I've got set to 3 p.m. Eastern Time, is in the top 50% of the intraday range. That's currently true at the time of this recording. It's not 3 o'clock yet, so we don't know if it'll be true at that time, but currently it is true. So now I'm going to hit view results. And here we go. These are the results of going long at 3 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when you gap down within the prior day range following an overbought RSI reading in a bull market. And then after the open, you have filled the gap and you're trading in the top half of the range at 3 p.m. So the results, again, based upon entering at 3 and exiting at 4:15 p.m. Eastern Time. Historically, we've got 86 samples of this for the S&P, 99 for the NASDAQ, 91 for the Dow, 66 for the Russell. And if we look at the win rates on these, they are a little bit lighter than what we saw this morning. This morning, we saw some pretty consistent win rates across all of them, around 60%, some a little bit better than 60% win rates. This time, we're seeing the S&P come in at 58%. The NASDAQ's very neutral at about 53%. The Dow, similar, 49%. And the Russell, the only one breaking that 60% mark for this pattern. And if we look at average win, average loss, fairly similar there. It looks like everywhere except for maybe the Dow, the average win is a little bit larger than the average loss. Tell you what, let's take a look at the view results distribution button right here. I'm going to click on that, and we're going to be able to see the results here of trading a single contract for this setup in the S&P, since that's what I've got selected. So I haven't shown this in a while, but I figured we would revisit it here. And what we're looking at are the results of this setup in the form of a histogram. So the way it's laid out, the taller the bars, the more frequently it has happened. So these two bars, which are very tall here, they are happening frequently in this data set. We've got 0, which is right here in the center. You can see it marked here in black. And then to the left of that, we've got red bars. These are bars that were negative results for this pattern. In the green, we've got the positive results for this pattern. Now, the farther to the extremes we go, the bigger the movement has been. The closer to the middle, the smaller the movement has been from this pattern. And you can see most of these results are very small results. Neither one of them get far from this 0 line here. And we don't have any outliers here on either end. So When I see this, I see small results happening more frequently. If you look at the blue area, that would be one standard deviation, and that looks like that's historically been plus or minus about 4 points or so. So not a very volatile closing period in the majority of these trades. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.